And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Sunday, July 18th, 2021. New format. The Sunday updates are going to be the longer updates for the week. And this is the update where I will review the long-term count on down. So I will be starting with the maximum monthly chart, which is the maximum amount of data that I can get on this NASDAQ for right now, which goes back to basically 1999, but it goes to the top that we had before we got the internet, the .com bust. And that ended supercycle wave 3, and then we had a supercycle wave 4 in the form of that decline, which was quite severe. Was there, traded it. More importantly is that what we are now involved with. So we're from that point of that low in October of 2002, that marked the low of supercycle wave 4. That means we're in a supercycle 5th wave. Now, what is consisting within that? Remember, when we're counting degrees, which will come up in the next chapter of my ebook. So it's yet to be published, but what I'll be describing in there is we're working these building blocks now from the top to the bottom. And why we're doing that is because of the trend is up in terms of the impulse waves. The 5-wave advances are up all the way up to whatever top level we are working in. And what changes is that level, that degree is the time frame. And there are Fibonacci numbers that we can use, or Fibonacci sequences that we can use to do time windows. And that would then help to what degree we're in. So in essence, supercycle degree is going to have to go to a full, we're going to have 5 waves of supercycle degree. So within the waves 1, 3, and 5, there are going to be 5 waves of cycle degree. And in a corrective wave, which is going to be waves 2 and 4, there are going to be 3 movements of cycle degree. 3 waves of cycle degree. So right now we have cycle 1 and cycle 2 done. And so we're in the cycle 3rd, which is an advance, and it is going to consist of 5 waves of primary degree. And within that, we have 5 waves of intermediate degree to make up primary 1, 3 waves of intermediate degree to make up primary 2. Excuse me. Again, 5 waves of intermediate degree to make up primary 3. We had 3 waves down. That was in the pre-pandemic or the first pandemic low. And that was primary wave 4. Then we now are in primary wave 5. And what this primary wave 5 is going to be completing is cycle wave 3. As you remember, in an update that I gave on Thursday, I talked about that I just have taken the count for both the S&P and the NASDAQ 100, and I bumped it up 1 degree. That doesn't change the structure in terms of what we're looking for going up, but it does give additional room to that end phase, this finishing phase. And the primary reason that I did that is because number one, it fits better because the market still is kind of giving us clues that the buying is not done. We're entering into a season of more important earnings, and I shouldn't say more important, but in terms of the index and the volatility and the movement, these are the big stocks, the big tech stocks will start to report, I think, middle of next week. In any case, we are reaching up into those levels where some big changes should be expected. Now, it's a primary 5th wave up. Now I get to go down, and I'm going to go down to the weekly chart. So what I've already done in terms of, we've just built our first Fibonacci zone. Let me go back out. I'm sorry, I meant to do that. We put the first primary level, because remember, it's like we're in the primary wave 5. So now I can put my first expectations, my first projections for what that primary wave 5 could look at and where it can go. And I get that by putting Fibonacci extensions on, and I do that from the bottom of primary wave 1, or the start of primary wave 2, or the end of primary wave 2, excuse me, up to the top of primary wave 3, and then anchor it back down at the low of primary wave 4. That gives us our first structured look at where primary wave 5 can go. So now I'll go down to the weekly chart, because the next layer that we can put in is within this primary 5th wave. We've completed intermediate wave 1, 2, 3, and 4. Then that suggests that we are in intermediate wave 5. And within intermediate wave 5, there are going to be 5 waves of minor degree. We keep going down the scale of our degrees. And so within that, I now can add our next group of resistance that could complete this intermediate wave 5, which in turn is going to complete the primary wave 5. And I'm going to go up. So I connected the same way. Bottom of wave 2 on the intermediate level, up to the top of wave 3 on the intermediate level, and then back down to the low of wave 4 on the intermediate level. Now we have our next zones getting filled in there. Now I'm going to continue to go down, and I'm going to take it to the daily, and now we're going to take a peek. So within intermediate wave 5, we will have 5 waves of minor degree: minor 1, minor 2, minor 3. So we are in, according to this count, a minor 4th wave correction here in the NASDAQ. So I'm going to go from the daily, I'm going to take it down to the 4-hour. We're just going to keep going down. So not much difference, can't really see. So now I'm going to go down to the 1-hour. Now here we are. We've already getting our overlaps in, and that's including this guy, because we were looking at, this is going to be not part of my discussion right now, so let's get rid of this. And we just have our larger, where all of this should end. But right now we can see, I'm going to pull this in just a tad. Here's the end of minor wave 3. So we're looking for 3 waves, an A, a B, and a C, of minute degree. And so within that, it's going to be A, a B, and a C. I'm going to say that this is A, and this is likely B, and then we get a C wave, which in and of itself is going to form 5 waves. 1, 2, 3, 4. It works. And now we're in the 5th wave. Now, once that's complete, and I can label it wave 4 for the upside count, I then can go and connect the bottom of wave 2, so it's minor wave 2, and the top of this minor 3rd, and then connect it to where the 4th wave is going to be. And that will give us our next calculation in terms of where can this minor 5th wave complete. And when it starts matching up with Fibonacci zones that can complete the other 2, and you're going to see, let's see where they start to overlap. Yeah, we get overlap here, which we've already exceeded. The next level would be here, 15,093.94. And that definitely puts in a new high. But where this one should end, I'm looking for a minor 5th wave. Not enough. So that suggests that we still have more downside to go before this minor wave 5 begins, because everything needs to look. So I'm going to pull this back open again. And now we need to look at what's going on, because it can take several forms. And we need to be able to look at them cleanly And for what I can, one thing, it's a corrective wave. Corrective waves come in several different forms. There is the complex, which could be a double ABC down. It could be a double zigzag. It could be a flat, all combining themselves together here, which tells us more that the market is not yet certain that it needs to go soaring higher. And it's not totally going to, if it goes sideways here, it's not totally convinced that it needs to go all the way down. So the more important thing to do is to remember that it's a correction. And within a correction, it's going to correct in 3 waves or a series of 3 waves. So if we have A, B, and then 1, 2, 3, 4, and this is the 5th, that could be the first ABC. If it's the completed ABC and we just start to move, then I can start to add that additional layer. Because don't forget, we're looking at that's going to come in as minor wave 4. And it's coming in much higher than I would believe it should, but it's still coming into the 4th wave of 1 lesser degree, and that's the minute degree. So it fits on that basis, but on a straight Fibonacci, it probably does not. And that Fibonacci is probably suggesting it comes down to here. And that then again would be fitting, and it would fit the larger correction. Coming in shallow just really suggests that there's been a lot of underlying pressure to go up. And that's what's been coiling each time. Coil, 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 goes down. Coil, 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 boom. And it might just go. And if that's the case, it's coming in shallow and we're likely to get a little solid push up and out of this. But first, we can do a couple of things to just put in some, it's gone past all this support that it should have had. And now I'm even on the hourly, it's below the 200 and it is lining up on the hourly to continue lower. So I would go back out to the weekly so I can see the whole thing. I don't need that. Let's go to that daily. And so we're in here and we want to count this particular wave. And so here's the bottom of minor 2. And I'll switch this over to retracements. And we're going to go from here up to this. And so now we do have, so look at all this. I told you it was going to come in pretty far down. And it is. 382. It's way down here. Right here. 14,262. And that might even be this level. Because I've got it there. It's off of this one. And 236 is here. 382 is here. Cluster all the way down to those are. But that's a pretty big drop. And that's just measuring at all of that. Now that I would not be expecting because again, we're moving into earnings. Unless these earnings are putrid, unless the earnings come out poorly, then yeah, it's going to drop. So the scenario would be is it might recover a little bit. But if we're trying to count an additional 5 down within this leg, and they're subdividing, that'd be 1, 2, and it's dropping in the 3 and the 4 and a 5. So yeah, it could go, but this is 200 points. These are like 300 points. So that would be a pretty steep drop, even for wave 5 of the C wave. So my vote is not going to be necessarily, we can go, and yes, it really can break, but it would change it. And until it broke 3.382, we have to keep alive that we saw a minor 5th wave up. So yes, the market can lose a chunk before it returns and just rallies and goes to new highs above 15,000 this time around. So, but once we do get the bottom of that wave 4 in, so we're counting a minor 4th wave. And once we get that in, then I can connect one more, and then we'll get an additional for minor wave 5. And then the last one would be as we're tracing out the minute waves. Because don't remember building blocks. And so we're counting the first five up in a sub-minute level are going to be for minute wave 1. And then we're going to do a minute 2, minute 3, minute 4, minute 5 to get up to minus 5. So we still have to do another 5 waves up. Wherever this ends, we need another 5 waves up if this is the count. That's where I'm going to leave it for right now. So what we review, the long term, how did we get here, what to expect from now, and putting on the layers of where this thing could top out. And we've also discussed how far it could drop to still keep alive that we have a minor wave 5. We could have a horrible week, guys, if it could just go down. And if it doesn't break, I'll go figure out that no break zone. But it's below this. So it can go pretty far before we would have to walk away and say, nope, not going to go there. Right? Minor, this is minor wave 1. So it has to drop pretty far. 13,448 is what it has to break in a minor degree to negate additional upside. So we can go pretty far. This is complete. 1, 2, 3, 4, 5 is complete. So it's a new set. So definitely we can come down to here and still do a 5th wave. And let's see what transpires tomorrow, because we have to also work the count. And that has to work on the hourly. So I have to label it up. It could be A, B, 1, 2, 1, 2. It could be. And that would be a monster 3rd wave down. But again, on the minor level, we know we can go down to this. So we could get A, B, 1, 2, 1, 2, 3, 4, 5 of 3, and then a 4 and a 5 of C. And then boom, it's done, and we're off to the races. So those are our possibilities. Definitively continue to trade what's in front of you. Trade what your moving averages are telling you. Again, the hourly right now, the 50 needs to drop below that 200, and that's going to line this sucker up to go down. Because then I'm going to anticipate that the 200 is also going to be angling a little bit more to the downside. The 50 already is. When they get in alignment from the hourly on down, please do not get in the way. Trade with it, don't trade against it, because this thing will just pick up and go. You're now talking, if it gets into alignment from the hourly to the 30. So in the hourly, if it's in alignment with the 30, then it's telling you on the hourly basis that the trend is down. On your 1, your 2, and the 5, you're going to have moments of rally. Always happens. The market does ebb and flow, but those are going to be providing trading opportunities to the downside if you're a swing trader. And if you're a scalper, or even just somebody who plays even the 1 and 2 and the 5-minute trend, it's going to provide opportunities on both sides. So you're just going to trade your 1 and your 2 5-minute, but when things really start to go and they're going down, and maybe it's below the 1 and the 2-minute 200, and now it drops below the 2-minute 500, then you're going to have to start moving out to see how severe is this going to get. What's the position in your other moving averages? And that's going to help to tell you. I really am going to end it there. Again, these updates will be longer on Sunday. They'll be more educational, and they will contain more things that we can carry through the week. Next update will be Monday the 19th.